Good morning, traders. Good morning, traders. Today, we want to talk about a CCI trader exposes or reveal a bearish CCI divergence, trading mistakes. A CCI trader reveals bearish CCI divergence, trading mistakes. All right. First thing first. All right. When we are talking about divergence, okay, what is the best technical indicator one should use for trading divergences, bearish divergences, or bullish divergences? All right. The ultimate technical indicator for trading bullish or bearish divergences is the stochastic indicator. In fact, I would say the stochastic 833. Now, but this subject is not, this tutorial is not about stochastic, it's about the commodity channel index indicator, the CCI indicator. We are talking about bearish, okay, CCI divergence mistakes. So, whenever you are using the CCI and you see a bearish divergence, just understand that the CCI is not the best technical indicator for trading divergences. Therefore, we need to proceed with caution. You remember I said this story before. You are driving, all right? If you have the amber light, what is he telling you? Say proceed with caution. There may be a pedestrian or an obstacle on the way. All right, reduce your speed. So whenever you see CCI exhibiting a bullish or a bearish divergence, be gentle. All right, I hope I get your attention on that. So you may be very gentle. Okay. So here we have a divergence. So the CCI bearish divergence for the CCI. So the CCI that I'm using here is CCI period 30. So if you are watching this video somewhere else, all right, you want to know more about CCI trading, check out our YouTube channel, Dayprotraders YouTube channel, Dayprotraders YouTube channel. You'll be watching a lot of playlists about CCI trading and all the CCI trading mistakes. So the CCI period 30 was sloping down, negative slope. At the same time, the Yahoo stock, all right, Yahoo, everybody know Yahoo. If you use the internet, this is Yahoo stock, epic YHOO. All right, that's Yankee Hotel Oscar on the Nasdaq 100. So Yahoo stock was bullish above a bullish trend line. At the same time, the CCI period 30 is going down. This is what we call a bearish divergence. But let's examine this CCI bearish divergence so we may avoid CCI divergence trading mistakes. So, all right. So the price was bullish, and the CCI period 30 was going down. So before we can sell, all right, we need to see a weakness in the price. So the CCI divergence, the bearish divergence that we see here, is a warning. Just remember, it's just a warning that there is a high chance that this financial instrument may go down because the momentum is diminishing, though the price going up. It's like a car that is going at a high speed, but is running out of fuel. So at one point, it will stop. Though it's at a high speed going up, the fuel is going down. This is about the momentum. So momentum going down, the stock is running up. But you see, now it breaks below that bullish trend line. This is the first indication to us that the bearish momentum is starting, or the bullish momentum is diminishing. But can we sell now? So look carefully. So So after we have acknowledged the warning, the divergence is a warning, we want to switch our attention to the price itself. So if a financial instrument is going up, it must display higher lows and higher highs. Very simple. Yes or no? Until it fails to display a new higher high. So this is a higher low, it's a high, it's a higher high right here. Now it breaks below the bullish trend line, indicating to us that okay, it failed to find a support. This green line was supporting it before. They break below it. So whenever a trend line is supporting the price and the price break below it, what is going through our mind? It was a support before. But before we can sell, that support level should be converted into a resistance level. It's not sufficient for the price to break below that support level. The first condition is that the price break below that support level, but ultimately that support level has changed now into, okay, a resistance level. So you see the trend line here, all right? Now the price is trying to retest it. So the best scenario that we will have expect here is anotherly break below that trend line and anotherly move up to retest that trend line. And at that point in time, we'll be saying to traders, we will implement a top-down trading method, looking for an opportunity to sell above, okay, they retest below the retest point. If you retest it here, so we say priority to bearish signal below that level, and priority to bullish signal above, using a top-down trading method to sell it now. Okay? Everybody agrees. We want to avoid the bearish CCI trading mistakes. So I'm revealing to you here. So but look at this high here. You see this high here? I'm going to move my vertical line here. I put it here. Look what's happened here. The price break below that low, which is also another indication to us that the bearish momentum is quite strong. So price going below the prior higher low is quite bearish. But the price as it did below that low, which is critical for us, it formed a tiny double bottom chart pattern here. Can you see that? Very tiny. I don't like those double bottom chart pattern. Whenever you see quite close like this, don't trust it so much. Don't trust it. It should be a bit wider. But it manages to go back above this high. All right? So, a lot of traders at this point in time, so when we see the bearish warning or the CCI bearish divergence, it's a warning. It's warning that the price has a high chance to go down. So we can switch our attention to the price, looking for break below, retest, turn around, or bearish chart pattern. But there is a bearish chart pattern that is being formed now. So you may say, George, are you blind or what? Okay, or have you just wake up? Okay, so here it is. There is a head and shoulder chart pattern being formed here. So the mistake that a lot of people are making, which myself have done before in the past, or which means you see a chart turn is being formed and you just jump on it and force it, hoping that everything, all right, work well. But don't do that, okay? But how do we trade the head and shoulder chart pattern? Well, the head and shoulder chart pattern is truly bearish. If the price break below the neckline, now this is our neckline. This low here is our neckline. This is the head, this is the left-hand side shoulder, this is the right-hand side shoulder. So if you continue to go down and break below the level of $32.72, and a further resistance there, that will constitute a bearish trading setup that we can trade. If you are selling now, because of this common sense trend line is kaput, this one along this move here, see here where it is now. If you receive a sell signal here, you are selling, you will be prepared to secure your gain as the price is approaching a level of $32.72. Because we are still in the bullish zone as long as we are above this low here. All right? But what usually takes place, people see like this, say, this is a bearish divergence. Last time it was successful. So as the price is going down, people will sell it here, right here at $32.72. Well, look what's happened. Boom, 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 boom. Price will return it back up. So what has happened? We want a validation. So break below that trend line, retest it, convert it as a resistance because it's a support before. If it breaks below it, it's just indicating to us that the bearish momentum is increasing. Now we want it to confirm that bullish trend line, that support level, to convert it into resistance. It means retest it. But there is something else that is happening here that a lot of traders are not seeing. But professionals are seeing it because they are using also what? The pitchfork tool. Okay? The pitchfork tool. So when you are trading the CCI divergence, do me a favor, use the pitchfork tool. That will help you a bit. That's all I can say. When you are trading also, okay, the head and shoulder chart pattern, use the pitchfork tool. All right? So I'm going to place on my chart the pitchfork tool very fast to help us avoid this bearish CCI divergence mistake. So here we have it now, like this. You see what's happening now? Now I'm going to remove my lines and we're going to go a little bit deeper and look, okay, at what's happening here. So financial instrument was going up before from A to B, this point B now. Now it pulled back all the way here. Now it's going up. Now you understand that though we have drawn the first trend line that we were expecting to that support level. You remember that green support level? We were expecting it to convert it into resistance level, yes or no? It breaks below it. We want it to convert into resistance level. But for one reason or another, okay, the price couldn't reach that resistance, that support level, the green line. Why? Because of the pitchfork tool. All right? Professional traders, I'm moving my line. Okay, hold on. That are using the pitchfork tool. All right, let me adjust my line correctly. All right, that are using the pitchfork tool. The price was coming near the median line of that pitchfork tool. But apart from the median line of the pitchfork tool, let's pay attention to the price itself, the previous resistance level. There were resistance here. You see the price changing direction here, yes or no? So there is a resistance there. Okay, now things are becoming clearer to us. There's another resistance here. So what the price has done, the price went up trying to retest the median line of the pitchfork tool, but also this resistance right here. So should we sell it now? All right. If you want to sell it, you want to use a top-down trading method to trade it. But the mistake that a lot of traders will make is that because they see a bearish divergence that has been in place since 2013, 2014, all right? People are selling. Remember here, those who were selling here saw that divergence. So they were selling above, okay, the bullish trend line. Is premature selling. This is not good. We are above a bullish trend line. So pull back. So here they sell it. Okay, no bad. So if you were here and you draw another common sense line like this, you will prefer it break below. This is what we are talking about. Bearish momentum is increasing. Now you want what? The retest. Yes or no? So you break below and now you retest it here. Boom, the blue line. Have I drawn my common central line correctly? If you accept it, that's the common central line. Price was going now, we draw that common central line. If he breaks below it, that's just telling us that, all right, it's weakening. Now we wanted to convert that blue line into resistance level, which he did. Boom, up. Now he retests it here. Those who sold it here make a better decision. So common central line along here was broken. Price break below it. Now convert that blue line into resistance level. Bearish divergence is in place. They will use a top-down trading method to sell it. You can see that if you are selling here, your first target is $43.34, one step at a time. You see how the price slowed down here? We are on a monthly chart for many months. This is, okay, 3-month price book. So they sold it here, boom, down, because it's a key level. This level here is a key level. Are you getting it now? So they sold it. It stopped at $43.34. Consolidation. Boom, down. Next key level. $39.34. One step at a time. All right. And then from there, boom, next level, $32.72. Now it formed this tiny double bottom chart pattern, goes above this prior high, which we talked about before. Now it's rallying up, okay, to retest the median line of the pitchfork tool. So one can clearly see the bearish diversion. Now the next challenge is how to sell, how to time the trade, where to sell, all right? And if you are not careful, you can make, okay, a CCI, a divergence, a trading mistakes. Though we are seeing now a head and shoulder chart pattern here, which is a bearish chart pattern. That bearish chart pattern is only valid if the price finds resistance below $32.72. If one is selling here at where we are now, so one more time, let's do it as we did here. You see, remember the blue line? You want to sell? Okay, draw at least the common center line. So it's kaput. You are watching it now, okay? If you are selling it now, you have a bit of edge because you can hide your stop loss behind the blue line, all right? But always use a top-down trading method. But also remember we are in a tricky place because there's a key level at $39.34. $39.34. So this is a bit tricky place to enter the trade. But let's go now to the daily chart and monitor the reaction of the price around that blue line, which I'm going to change the color now into pink. You see now? So what I'm trying to communicate to you here is that if you identify a bearish CCI, understand that it's not finished yet. Don't rush and sell. That's the key point to understand in this tutorial. Now you want to concentrate on the price, draw your trend line, draw your key level, look for break below, retest and around. Retesting, either the common set trend line, retesting either a key levels, breaking below and retest. This will help you, to make excellent decisions. More observe, analyze the price structure. So here price was going up before, forming high lows, high. Now it break below the gray line, indicating to us that the bearish momentum is increasing. But we want a validation of this as a resistance level. But the market prefers the median line of that pitchfork tool. Right. Now we draw another trend line. So we see the bearish divergence, we acknowledge it, we are aware of it. Now a bearish chart pattern is formed. We want to see which chart pattern is this. How do we trade it? Right. So if we go now to the daily chart, this is the pink line that we draw on the monthly chart. The price D below it, now the test here, people sold it down, see here, boom. All sorts of mess going on here. But now, look, there was a gap here. There's a gap here, you can see. There was a gap here in this session here. Now the price is now sitting, so to speak, at $39.34. Use a top-down trading method to trade it. If you go to the hourly time frame, what's going on here, my friend? All right. Step by step, there is a bearish channel on the hourly time frame. Will you agree? All right. So if we draw the median line of that channel, this was a good place to sell also. So price D below the peak line, retesting the intersection of the median line on the hourly time frame. This was a great place to sell also. Now it's hanging here. All right. If you did not sell it here, you need to be a little bit patient. All right. Did you get it? Okay. If you have any question or suggestion, put it in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about CCI trader reveals CCI divergence trading mistake. Happy trading to you all and speak to you soon.